Okay, welcome to my MetroFX Forex Bootcamp training. MetroFX is the tag name that I use to identify my club, right? MetroFX. Um, and today's session, we're going to go through how I set up my charts, how I read the charts, what indicators I use, and we're also going to go over the 1 minute strategy that everybody's been having a lot of success with. The 1 minute strategy is a strategy that will allow you to earn some money, um, some quick cash within a 1 minute trading session. We're going to go over that. It's with the US 30 platform or indice, and it's also good. You could also do it on NAS 100 and also S&P 500. Okay. So what is the 1 minute strategy? Let's go over that first. So I'm going to just, this is my trading view chart view. Everybody should have a trading view account. If you don't have a trading view account, you can go to my website at MetroFXTraders.com. I'll put that in the chat. And what you do here, you'll scroll all the way down until you get to the section that says trading tools. You click on trading view right here, and you get yourself a free account. Okay, create a free account so you can have access to the charts. Okay, this site that I created has a lot of great resources, so you have an opportunity to come to this site and learn a little bit about me and how I can help you guys. I like to teach the Forex market very in a simple fashion, nothing complicated. We're going to keep it super simple. Okay. I do have a mentorship program. Now, if you're part of the academy that I promote, which is Gobi, you get my trading absolutely free. Okay. If you don't want to be part of Gobi Trading House Academy, you would have to hire me, right, as your mentor. So this is a little video that talks about exactly what I do. And you just click on get started, and there's a fee to pay monthly in order to jump onto these trainings. So you guys that are part of the training right now, you don't ever have to worry about paying because you're grandfathered in. Okay, but anybody going forward as of today will either have to hire me as a mentor or be part of Gobi Trade House in order to get access to this platform, to this trading platform. Okay, so going forward, yeah, no, don't put anybody in the group for free. Let them come through me first, and then I'll invite them to be a Gobi member or hire me as their mentor. Okay, so on this site, you also have your brokers. Okay, some of you guys already got Hugo's Way, so it's a good broker. KOT Forex, I use this broker. This is a really good broker, but there's others here that you guys could take a look at as well. There's also a pocket options. We'll go over pocket options eventually in the near future. This is just a quick commercial about my website, and then we'll dive into the charts. You also have your trading tools. We talked about TradingView. Get yourself a TradingView account for free, Forex Factory. You could read about what's going on in the world with Forex Factory and the pairs that you trade. So it's a good platform to, review and do some fundamental analysis with. If you don't have the MetaTrader 4 platform on your laptop or desktop, this is where you go to get it. FinViz, I use FinViz to help me find what pairs I need to trade that are active. We'll go over that in one of the videos. Baby Pips online education is absolutely free. Okay, this educational platform takes you from kindergarten all the way to graduate school, and it's a lot of reading, but it's at the same time it's a really good platform to learn the Forex market. Then we have funding challenges. Now, there are two companies that I promote that'll reward you with real money if you pass their challenges, right? So my thing is with my team, anybody that I personally sponsor in a Gobi, if you maintain your membership for 90 days, I will help you get a funded account. Okay, so what I do is I take a portion of the commissions that I sent to me through Gobi, I put it aside for you, and then after 90 days, I purchase a funded challenge for you with my FX funds. Once you get that, once you get that set up, you have an opportunity to try to pass two of their challenges. If you pass 2 of their challenges based on your trading, they're going to give you a $5,000 account, real money to trade with. And when you trade that real money, grow that money, so to speak, grow that account, they will do a profit split with you. First, they start off with 75-25. Well, you'll earn 75% profit. They earn 25%. Okay, so it's a really good challenge, right? Because once you get really good, if you don't have the funds to get started on your own, these funding challenges will help you get some real money to trade with. They're prop firms. Okay, and then I got Level Up Society. They have a great challenge program as well. I think they'll give you like a $10,000 funded account to trade with. You also got to pass 2 of their challenges. So when you come to my site, review both of these companies, because that's what we're going to be using going forward. So that's my gift to my Gobi members. Maintain your membership for 90 days, and I will pay for one of the challenges for you. Okay, and then I have my own store. You can go ahead and get your Forex journal or notebook there. Okay, and these are all the other investment vehicles that I have as well. I used to be a New York City stockbroker, so a lot of these vehicles I use personally, especially M1. Take a look at M1. You can create your own stock portfolio and manage it, which is really good. We got crypto, we got all kinds of stuff on here. So make sure you review that. And then all my social media platforms, and so my Facebook, make sure you're my friend. Subscribe to my YouTube channel and also Instagram. Okay, so that was a short little commercial. And then I'll put some video on here, Video Vault, some tools that I use, and you can also contact me here. All right. Okay, back to the chart. Now, to set up your chart, what I want you guys to do, and I'm going to take all this off right now. There's 3 MAs that I use, okay? Moving averages, okay? So I want you guys to set up your chart the same exact way. So you could take a picture of the screen, you can write it in your notes, and this is what you want to set up. You want to create the first MA. You want to create this line right here that goes through your candles, okay? So this one is MA. The inputs are going to be, oh, how do you find it? Sorry. You go to indicators. Okay. You type in moving average. And you click on moving average updated, this one right here, right? I already have it started as a favorite. So that's the first moving average. So you're gonna click on this 3 times because you want this 3 times, right? Okay, because you're gonna put that on your chart 3 times. So the first one is this one. When you double click on it, okay, it'll open up the how you can actually put your inputs and so on and so forth. You want to put the length at 9. Okay, it might be a different number there, but once you set get it on your chart, you want to make sure it's a 9. Okay, now the second one. Okay, and you can also change the color. You can use whatever color scheme you want. I just use different colors to make sure I know which one I'm looking at. The green one, you want to make sure it's a 14. It's also a moving average. Okay. And to change the color, you just go to style and then click this to change the color and whatever color you want. Okay. And then the last one is a 50 moving average, which is this blue line right here. Okay. And input is going to be 50. I'm going to make that 50. Okay. You guys got that?
Yes.
Okay. So how do we use this? Okay. This is a tool that I use as an indicator that monitors the candles and past events. All indicators cannot tell you future events. It can only record past events, but there are certain things that happen that you want to pay attention to. Okay. So when I'm looking at this chart, okay, the very first thing you want to look at is a 50 moving average. Okay. Anything above the 50 moving average is bullish, right? It's above the 50 moving average. Anything below is bearish. Okay. But when my 9 moving average crosses over the green, which is the 14, okay? Again, when the 9 crosses over the 14, that's when you want to start looking at sell trades, bearish trades, okay? All right, but when the 9 moving average, which is my gold line here, when it crosses above the green, like you see it right there, make it bigger. You see a crossover, right? Can you guys see that? Let me show you.
Yep.
Right here, you cross above it, right?
Crosses over and above.
Right, over and above, correct. That's when you're going to do buy trades, okay? All right, so let's practice this together. And then when it's above the 50, that's when you don't know everything's above, okay? Okay, so let's look for a trend. Now, you guys already know we have uptrends, we have downtrends, okay? We got a downtrend that looks like this. Okay. Now, what I want you guys to pay attention to when you do find a downtrend is to enter the trend on a retracement. When a retracement is a pullback. Okay, so this is what I mean. Let me just click on this. Okay. This is a pullback. This is a pullback, and this is a pullback. Okay, so when you see a downtrend, you don't get in a trend when it's going down. You wait for the pullback. Okay, so that's a retracement level. And then you start looking for entries during the pullback, and then it goes down. And if you miss this entry, you go ahead and wait for another pullback, and you enter the trend here. Try to write it down here, so that you take profits. If you miss this entry, wait for another pullback and get in only on pullbacks. Okay. Okay. So does everybody understand that?
Yes.
Okay. Very good. Very good. All right.
And that would be a sell?
Yes.
Okay.
Yes. You got it. It's the reverse is true with a buy as well. Okay.
Okay.
Okay. So I'm gonna draw that out real quick for you guys. Starts here. It goes up, retraces, goes up, retraces, goes up, retraces. So what it's doing is what? It's making higher highs and higher lows, right? This high is bigger than this high. That's a higher high. This high is bigger than this high. That's a higher high. Okay. This low, right, is a lower high. It's bigger than this low. And this low is bigger than this low. Okay. So that's a uptrend. Okay. We're only going to enter trends during uptrends or downtrends. We're not going to get in a trade in consolidation or the restructuring phase. Okay. Hence, we'll go into the 3 phases in a moment. But this is what you're always going to be looking for in the markets, either an uptrend or a downtrend. Okay. And again, you're going to enter the market on the retracements, on the pullbacks. Okay. So this is where you'll, if you miss it here, it goes up, you wait for it to come back. Then you enter here. If you miss this one, wait for it to go up, wait for it to pull back, you enter here. So what you're looking to do is enter the trade on the pullbacks. We call them retracements or pullbacks. It's up to you. Okay, and then we just take them up higher. Okay. You guys got it?
Mhm.
Good. Great students. All right, let's delete all that. And now let's look at the chart. With, go ahead, question. Any questions? I thought I heard a question. Okay. Okay, so what I normally do is a top-down analysis, right? We start off with the monthly. This is the US 30 chart. So we start off with the monthly first. Okay. We take a look to see, the very first thing we need to look at is what direction the market's going. Is it an uptrend or is it a downtrend? Okay, so I look at that. I look for it in the higher time frames. Okay, I enter the trade on the 15-minute, but I look for the direction of the market on the higher time frames. And I want to see a trend here, right? Okay. So if I'm looking at the monthly, every one of these candles develop in a 30-day period. Okay, so it takes 30 days for every one of these candles to develop. Okay, so the very first thing I look for is, okay, well, what trend is it in? Okay, what trend is it in? I'm gonna erase this right here. Okay, so if we look at our MAs, right? If we look at the gold line, we notice that right here, it crossed above, across, it crossed the green and went above. So all this right here, we're all in an uptrend. Okay, but then we see something right here. We see that the gold is crossing over the green for going downwards. So what does that tell us? Well, it's changing, right? It's changing the trend. Okay, it's changing the trend and it's trying to pull going downwards. But we also see a candle here that's really sticking out. And if you can identify this candle based on the candlestick Bible, you'll know exactly what's going on with this market. What do you see right here? Who can identify this candle right here?
Doji.
It's a doji, correct. What does a doji signify?
Change in market.
Correct. Upward or downward?
That one's going back up.
Okay, very good, very good. Because right, this candle before it was telling you there was a down market, right?
Mhm.
Because this candle is an engulfing, it's a bearish engulfing, it's pretty much engulfing this body of this candle right here. So you had a pullback, which means it's going down. But then this doji developed and said, wait a minute, I want to reverse what you see here. Okay, because right here, the market's very indecisive. The buyers and sellers are struggling. So that's why you see somewhat of a cross, like a doji. Okay, but then there's a fake out, right? There's a fake out because then it started pulling back down. Everybody thought it was going to reverse on this candle, but for it to go up. But what did it do? It waited for the next candle to develop for it to start pulling back up. Okay, so one of the things I look for, again, it's above the 50 moving average, right? That's also telling me it's bullish because it's above the 50. But I also put a horizontal ray, okay, write that in your notes, a horizontal ray to find out, okay, where in this whole structure does a market have to go to in order for it to really change directions, okay? Where is that point? Well, that point is right where I just put, right here, okay? Because what I'm looking for, I look left, right? I look left. I see that it was bullish here, right? And there was a pullback right here. I'm looking for the pullbacks. This is a pullback. And there was a pullback right here with this blue candle. Now my blue candles are bearish candles. Yours could be red, whatever color you want it to be. It's your choice. But my white candles are bearish. My blue candles are, when white candles are bullish, my blue candles are bearish. So this is the last pullback before it got to the top, right? Before it started to consolidate, I'm looking for the last pullback, which was right here. This is where I put my structure line right there, okay? Right below that last pullback. So look what happened here. On the right, we saw that this candle touched the line, right? Went up, past it a little bit, and then shot back up, right? What is that telling me? Well, that's telling me that had this candle closed below this bearish candle right here, there would have been a reversal for it to continue to go down, okay? But it never did. It never did. This candle never closed below, okay? But it went right back up. And then the next candle after that, it continued its rise on an upward trend, okay? So are we in an uptrend team or are we in a downtrend?
Uptrend.
Very good. Uptrend. You are correct. So now that I've identified that, did anybody want me to repeat what I just did? Okay, very good. You guys are getting it because monthly, you go ahead and put that line, that structure line, which is that right here, this line right here. So now that you know this line is a very important line. Anytime you see candles not crossing this line, you're going to maintain the status, thinking in your mind that it's an uptrend. The whole time you're trading, you're looking for up trades. Okay. Okay. So now we're going to go to the daily. Okay. And look what happened, right? Uptrend, right? Because if you put a trend line right here, what do you have? You have an uptrend, right? So you see how the monthly gave you clues, right? Okay. And what do you also have? You have my gold line crossing above the green. What is that telling me? Uptrend, right? Right? So it's being consistent from the monthly. Now this is the daily. We're going to drop down to the hourly. Okay. We know we're in an uptrend. We're not going to buy doing no sell trades because we don't want to go against the trend. We don't want to do that, you know. So what do we see? Let me put some arrows here. We see this is still crossing over, right? My gold line still above the green, so it's still an uptrend. Does that make sense? Okay. Okay. All right. So now we know we're in an uptrend. We've identified a couple of things. We're above the 50 moving average. My gold line is above the green. We're going to look for entries. Okay. We're going to look for entries. We're going to look where we could enter this trade on an uptrend in the 15-minute. Some of you guys could use a 5-minute. Some of you guys could use a 1-minute. It's up to you. But I like to use in the 15-minute because each one of these candles are 15 minutes in duration. Okay. So I'm looking at these candles now. Okay. Number one, I'm marking up my chart. I'm saying, okay, this is a crossover, right? This is a crossover right here in this area is a crossover, right? That means it's bullish. It's above, right? Above the green, okay? It's still above the 50 moving average and it's above the 14 moving average and because the gold is my 9 moving average. Okay, so now what are we looking for, team? What are we looking for? We're looking to get in the market for an uptrend, right? We got to wait because what did I tell you guys? When do you enter the trade?
On an uptrend.
On an uptrend, but you enter the trade on a pullback.
After the pullbacks, yeah.
Correct. Okay. You enter the trade on a pullback. So right here, we got a couple of pullbacks, right? Pullback, 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 right? So you missed these guys right here, right? You missed them. So you got to wait for another pullback. If you miss this pullback, you got to wait for another pullback. So right here, right? Maybe it's going to pull back, right? It looks like it's pulling back, but let's open it up. Because you don't want to get in a trade when it's going sideways. That's called this consolidation phase. You don't want to get in a trade at that point. You want to wait for 3 phases to occur. Mark, are you there?
Yeah.
You tell me what the 3 phases are, please.
I'm sitting over here trying to shrink your screen. Sorry.
What's the first
That
phase
was totally
called?
wrong. Phase 1. That's the consolidation phase.
Phase 2,
Phase 2 is expansion phase,
phase 3.
the trend phase.
Very good. Awesome. A+, my friend. And that's what I teach you guys. Phase 1, this is phase 1. Okay, let's open it up. And use my handy dandy tool. This is phase 1, because it's going sideways. Okay, we're now entering phase 2. This is phase 2. Now, phase 2 may consolidate and go a little bit lower, right? We got to wait for phase 2 to finish. Okay. Because once phase 2 finishes, it's going to be an uptrend. It's going to show you white candles. After this candle, it may dip down a little bit more. Okay, because this phase is a fake out phase. Phase 2 is always going to be the fake out phase. Okay. All right. Because it's going to try to convince you that it's going to go lower. But we already know. We already know what we already know it's an uptrend. So we're not going to get in on a sell. We're going to get in on a buy. Does that make sense?
Mm-hmm.
Okay. So as soon as this phase 2 is over, you're going to look for a white candle to develop, for it to push higher. Okay. Because if we look at this and we shrink it a little bit, we look left. We look left, and we on the left side, right? The last pullback that we see was this one right here, correct? Okay, we have a pullback here. We have a pullback here. So when you see the first pullback on an uptrend, this is what I want you to do. I want you to put a horizontal ray underneath here. I want you to put a horizontal ray underneath here. So if this blue candle closes above these 2 lines, it's no longer an uptrend. It's just changed on you. Does that make sense?
Mm-hmm.
Okay. Okay. Because if this blue candle closes below this line right here and continues its trend going downward, it just reversed on you.
Broke structure.
It broke structure, correct. Okay. All right.
I have to say, you make it look simple.
All right. So you see this, you see this, see this. So if this closes below that line, it broke structure. Okay. But if it does one of these, if it broke structure and closes below the line, okay. It's going to retest the line and then continue to go down. That's called a retest of the broken structure line. Okay. And that's when you know that, yeah, it broke structure. You look for the retest, it broke structure, and now it's going to go down. If it closes below this line, you look for you wait for a candle to close below it. Retest, and it's going to continue to go down. Okay. All right. But it hasn't done all that yet. So that's a future prediction, right? Because we don't know what's going to happen in the future, but we try to prepare ourselves in our mind's eye to predict what may happen in the future. Okay, so this may happen, okay, or it may not happen, okay, but if it does happen, we're prepared for it. So that's a broken structure line for downtrend, right? But we're bullish, so we're hoping that it's not going to happen because we want to get on the trade for the trade to go up. Okay, so we erase all these lines. Okay. All right. So any questions on that so far? Okay. So to help you guys out, let's do some historical data here. Let's back test what I just shared with you. Okay. And this is how you back test. You look left. You look left and you practice what I just shared with you. So we're going to look for an uptrend, right? We're going to look for a really good uptrend, solid uptrend with some pullbacks. Okay. We're going to look left. Okay. So this is a really good one right here. Wow. This is a really good one right here. You see this uptrend right here?
Mhm.
Okay. All right, so it started off a downtrend. It consolidated. This is all phase one, everybody. Phase one, right? Phase one, right? This white candle in the middle. It's phase two. Okay, actually, it's all phase one. The blue candle is phase two, and then it continued its uptrend right here. Well, let's analyze this real quick. Let me show you exactly what I'm talking about.
Would that white candle have possibly faked us out because
Yes.
thinking it was a phase two and then the
Yes.
candle after that?
Yes. Yes. So what are our indicators here? What are the indicators saying? Well, we had a downtrend. Now with a downtrend, right? The last candle that popped up, right? This is a retracement, the white candle. The last candle that popped up is where I want you to put your line, your horizontal ray. We see that downtrend, this candle popped up, you put your line there. Okay. Okay. This candle, this was a downtrend. This candle that popped up, you're going to put your line there. Okay. And you can put another one if you like. Now you can tell that I don't use support and resistance lines. I don't need to, because I'm putting my structure lines as, you know, on my charts to let me know if the candles violated these lines, it's going to reverse and go up or down. Does that make sense?
Mhm.
Okay. So I'm looking at a downtrend. I'm looking at the pull up, which is that white candle. I put one of my lines there, which is going to be my structure line. Okay. As I look at the pull down, pull up here, another line goes there. Structure line goes, it goes down, pulls up. I put another line here. So I'm looking for the candles to violate these lines. And it did, right? If we look at the reversal in trend, what had happened? Well, let's take a closer look. Okay, we see the gold line crossing above the green line. So number one, when that happens, right here, we're anticipating it to go up. Does that make sense?
Yes.
That's the first indicator. Okay. Okay. So I just put a replay on the screen so that it'll show you, because the market is closed. So I wanted to do a replay and show you exactly what's going on. So we see the gold line crossing over the green. Okay. Okay, so the gold line continues to be above the green and it's above the 50 moving average as well. Do you see that?
Mhm.
It's pushing upward. So let me pause it real quick. Okay, but what happened? We see that it violated this line here. If this candle closed above my structured line, right? So that's an indicator number one. Okay, uptrend, right? Because in order for it to continue to be a downtrend, it cannot close above my line. It has to hit the line, bounce off, and continue to go down. But it didn't do that, right?
Right.
It went above it, right? So now the next candle opened above the line as well. So now I'm really thinking it's bullish because I didn't see a blue candle yet, right? Right? So now I'm looking to put an entry above this line. But look what it did. The very next candle, right? This is a gravestone candle right here. Gravestone candles, basically, if you see a candle like this and another candle opens below it, it's going to go down. But this candle opened right at it and started to go up. So it never became a gravestone candle, because this is a fake out candle. It's trying to tell you, okay, we're going to go back down. But, you know, but it never did that. And plus, we already know that the gold line is above the green. So we're looking for bullish entries. So this candle engulfed the gravestone. So this is also a bullish engulfing candle. And we're looking to place entries here. But look at the next structured line. You see this line right here? What did it do? This candle closed above it, right? But this candle came back and retouched the line, right? Retouched the line. And this candle pushed up, came back and retouched the line. So you got two touches on this line and it did not close below it. So what is that telling you? Bullish, because we still have our gold line above the green, right?
Mhm.
So we have the candles telling us it's bullish. We have this gold line telling us it's bullish. So we have two indicators that it's bullish, right? Let's push play. Look at that, a gravestone and a hammer. Hammer tells you it's going to pull back. Okay. Look at that. Bullish engulfing, engulf this one, and it continued its ride to go up. Look at that. Came back, touched the line, and bam. It's not coming back down. That's why I have those lines there. Okay. So you think you guys can do that?
Yes.
Okay. All right.
Like Mark said, you make it look so easy and simple.
Yes, you do.
Yeah. Because I mean, a long time ago, I was where you guys were. I was like, okay, how do I read the charts? You know, how are these guys making all this money? There's got to be a technique, a strategy, a science behind it. And then after watching tons and tons and tons of YouTube videos and reading the Candlestick Bible more than once, also reading Naked Forex is another book that I read. I'll be sharing that book with you guys, called Naked Forex. Teach you how to read the charts without all these lines and so on and so forth, because you don't want to make your chart too cluttered.
Mhm.
You don't want to have all these different indicators and lines on the chart. Okay. Got to keep it simple. Okay. And when I learned that, I was like, okay, that makes sense. Okay. So with a lot of practice, with a lot of back testing, I noticed the patterns, because you have to learn patterns. You have to understand the candles. Okay. You got to understand when to enter. Okay, because remember, this is a pullback. So you would enter on pullbacks. So the rule of thumb is always buy low, sell high. So when it pulls back, it's going low. So you enter on this candle to sell high, because when it comes up here, that's when you want to sell. You want to get out. Okay. Okay. This is all 15-minute candles. All right. So that's pretty much my strategy.
So basically you want to sell on a phase 3.
Right. Exactly. You sell on a phase 3 or buy on the phase 3.
That's it. Okay.
Okay. So you got it.
Over time, do you find that you do more of one or the other, buy or sell, just on average?
I normally enter the 15-minute. Put my,
Uh-huh.
my entries on the 15-minute or the 5-minute. Because the 5-minute really tells me you can see when the market's really moving in the 5-minute.
Mhm. But if
Okay.
you just took your whole history of doing this, do you find that you do more buys than
No,
sell?
it depends. It depends on the direction of the trend.
Because I'm brand new to this. This is my first learning about the candles, but I tend to buy when I'm seeing it go up and then sell when I'm seeing it go down. And I've been,
Okay.
doing that, but I haven't had any knowledge yet. So I'm learning
Okay.
from you. This is amazing.
Okay. So there you go. You have to determine what kind of trader you're going to be. Are you going to be a scalper? A scalper is a person who enters a trade on when there's an opportunity, either an uptrend or downtrend,
Okay.
and you're in and out. That's called a scalper, right?
Okay.
A day trader trades in one day. They
Mhm.
usually set 1 or 2 trades, 3 trades a day. They'll either wait for the high, because there's always a high and a low on every trend, right?
Mhm.
This is the high and this is the low. Day traders usually wait for the high and see what's going on here before they enter the trade, right? Because when it hits the high, it can continue to go higher, or it can continue to go or reverse and go to back down to the low. You see what I'm saying?
Yes. Yes.
So that's a day trader. Now, a swing trader, they look at holding their trades for more than one day.
I see. Got it.
Okay. 3 days, 5 days. They look at the monthly and the weekly, because the candles do the same exact thing on every time frame.
Right. Cycles.
Right.
Okay.
So that's why I started with the higher time frames, to see what directions the market's going. And we determined it was an uptrend, right?
Mhm.
Then went down to the lower time frames to find my entry.
Beautiful. Got it.
Okay. All right. So that is pretty much what I do. That's how I was able to get a lot of successful wins. I mean, don't get me wrong, I do have losses. Sometimes I don't predict it correctly, and I go against my own trading strategy, and all of a sudden I'm like, I'm in drawdown, or I have to close out my trade. And then another thing, always use stop losses. Okay, stop losses is where you enter a trade. Let's say you enter the trade right here, right on this candle. You want to put your stop loss a couple of pips below. Okay, that way, if the trend reverses on you and doesn't give you what you're looking for on an uptrend, you don't blow out your account. Does that make sense?
Yes.
Okay, because the main thing you want to do is preserve your account and the principle of your account. You want to trade for another day, and by putting a stop loss, you're protecting your balance, so to speak. Okay. Now, going forward, you're going to need to get used to seeing red, right? Which is drawdown, which is a negative account. But you have to set in your mind, how much are you willing to lose on the trade? Is it $10, $20, $30, $100? But once you set that number in your mind, try not to lose no more than that. Because psychology is, we tend to say, okay, the market's going to reverse on me, even though I'm in the red. It's going to reverse, it's going to reverse, it's going to reverse. So we tend to look at that red number, hoping that it's going to reverse, right? It doesn't reverse. It doesn't reverse. So you want to close out that trade and try to get in later on when there's another window of opportunity. Okay. Because sometimes we tend to close out our buy trades, the blue, quicker than we close out our red trades. No, we need to hold on to the buy trades, but close out the red trades.
Yeah.
Does that make sense?
Mhm.
Okay.
That's a mindset thing, isn't it?
That's a mindset.
Yes, yes.
That's the psychology of trading. Yes. Okay. And don't double down and don't revenge trade, meaning that, okay, I'm in the red. I'm going to put another order in because I'm thinking it's going to go up. No, don't do that. 'Cause then
Oh, that's what I've been doing. I didn't know it was revenge trade. Okay.
don't want to do that because now you have 2 trades that's going to be in the red, 3
Oh.
trades that's going to be in the red. So the market's like, give me all your money. I don't. You don't want to give all your money away, right? So you want to preserve your capital. If you've got a loser, you got a loser. Yeah, you walk away from the computer, you take a step back, reanalyze what you did wrong, okay, and then trying to find another window of opportunity. Now, when entering the market, you don't have to take every trade, okay? You can watch it and mental trade or demo trade, right? Always practicing your demo, right? And say, okay, in my mind's eye, I know it's going to go up. And if you're right, then you mentally was right, right? If you're wrong, you know you were wrong. Okay, so don't ever trade with real money until you master reading the charts. Does that make sense?
Yes.
They may take a month, 2 months, 3 months, 1 year, 2 years, 3 years to master the charts. Okay, because I've trained a lot of people in the past who are no longer with us that said, I'm ready to go in with live money. Because they lost 50 to $100, they're no longer with us because they think they can't make this work. Okay. And I warned them. I said, don't trade with real money because the market makers, they know who are the real traders and they know who are the novice traders. Okay. And they'll pair you up against each other and they'll take your money. Okay. Because novice traders tend to, don't set any stop losses. They tend to trade against the trend, right? And those are the things you don't want to do. You want to make sure that you understand exactly what you're reading. You execute your trades based on your trading strategy. You have to write that on paper. If this happens and that happens, I'll enter the trade. If it doesn't happen, do not enter the trade. Does that make sense?
Mhm.
Okay. Okay. So any questions on all of this so far?
Is this the 1 minute strategy?
No, this is the overall strategy.
Okay, yeah.
When you're charting up the charts, that's the overall strategy.
All right, good.
Yeah, from the top down strategy, looking at the monthly, looking at the weekly, looking at the daily, and trying to enter the trade on the 15-minute or the 5-minute.
All right.
Okay. Now I'm glad that's the introduction for me to go into the 1 minute strategy now. Okay. The 1 minute strategy is a scalping strategy because you're going to only be in the 1 minute strategy for 1 minute. Does that make sense?
Yes.
Okay. So we're going to go to the 1 minute chart right here. 1 minute chart. We're going to look at what happened on we'll start with Wednesday. Wednesday, on TradingView, there's a calendar. You click on the calendar down here. And we look at Wednesday, the 27th. And we go to 9 o'clock that day. Okay. And we want it to go there now. Okay. So we're going to open this up a little bit. Okay. We're going to use 2 lines, a vertical line. We're going to put it at 9 o'clock.
Is this 9 o'clock Eastern time or?
Yes, 9 o'clock Eastern time, because the market, you're going to be trading the New York session at 9:30. So that's when the market opens for this session, is at 9:30. Okay. And then you're going to put another one at 9:30. Okay. And then what I'm going to do is pretend you don't see all that stuff that happened on the right side. So this is where I put support and resistance lines, because I need to know where the top is and where the bottom is within this half hour, right? So this was the top. Resistance is the ceiling. And then we have the floor, right? Which is the support line. Okay, so within this box is what I'm really paying attention to. Can y'all see that?
Mhm.
Okay, this box right here. Now, you could use these lines, but if you don't want to, because you think it's going to confuse you, you can turn them off. Okay. Okay.
How did you get that high and that low again?
The high is based on, if you look left, okay. Well, within here, you guys see how many multiple touches are the candles coming back down on? Okay. So we have 3 touches here. 1, 2, 3, 4 touches, right?
Mhm.
And then it reversed. So that's my resistance level, because it didn't go past that. You see what I'm saying?
Yeah.
Oh, okay.
And then on the bottom, we have a couple of touches here, which you could have put a line here, but it broke through that support line and created another low right here, which is telling me that if I look left over here, this was also a support, right? Because a lot of these candles touch that line over here. Does that make sense?
Yeah. So
Okay.
this already happened. For some reason, I thought this hadn't happened yet. But yeah, I see that you're charting from 9 to 9:30. What happened, and then you're going to go from there.
Correct.
All right.
You got it. Okay, so this is what I'm paying attention to. Okay, now let's click play, because what I want you to understand is this. At 9:29, if one of these candles either close below the line or above the line, that's the direction the market's going to go. Let me repeat myself. If one of these candles, if it continues to go down, and this blue candle at 9:29 closes below, it's going to go down. If the white candle closes above this line, it's going to go up.
So in
Okay.
that case, if it reverts back, do we need to wait for the white candle to go above the line you just drew up the top?
Yeah, you got to wait. You got to wait, because we're still in the box, right?
Yeah.
All right. So let's click play, and we'll talk more. Okay. So what happened here,
Dropped.
right? That's it. Okay. Now, what did I say? If it closed below the line, right, it's going to go down, right? But you got to wait for a retest. You got to wait for the retest of that line. You see what it did right here? It retests the line, right? But at 9:30, what happened? You got this white candle. It retests the line. And let's continue to see what happens. You would get in for a sell, right? Did you see that? Let's do the replay again. Okay, so we know it's a sell. Let's work down a little bit. Because this candle closed below it, right? These two candles closed below it. It retouched the line. Okay. And this candle, this is 930, right? You already know it's going to be a sell because it's below the line. You see that? So at 931, you would have got in on this candle and get out really quick. Okay. Because this candle shot down and then it shot back up. So you got to get in and out. Because if you don't get in and out, this is what happens. You see that? It shot up and then you would have lost. So your opportunities were right down here. At 931, you're out on this candle.
So your white candle was basically represent the losses.
Say it again.
So the white candle represents your losses.
No. The white candle is a fake out candle.
Mhm.
Okay. Because it shot up, right? But it touched the line and then came back down on this candle right here. These two candles they went all the way down here. So when you saw that, you had to get out really quick. You had to sell it out really quick, close out the trade on these two candles. That's why we call them 1 minute trade. So depending on your lot size, you'll either make $10, $20, $30, $40, $50, $100, depending on your lot size. But you're in and out in 1 minute. But you already know that you should be getting into trade during a sell because these candles close below the line, your support line. Does that make sense? Okay. Because at 933, you should not be in this trade. Okay. You should not be in this trade. You're already closing out at 931, 932. 933, you're not in this trade because if you would have stayed in the trade, you would have, yeah, your account would have been blown. Okay. So this was Wednesday. So that was a successful trade for Wednesday. If you pick the right direction, now let's go to Thursday.
This works for NAS and US 30.
NAS, US 30, and S&P 500.
S&P 500. Okay.
Okay, now we're going to go to Wednesday on Thursday, 9 o'clock. Why is it not showing me? The 28th, okay. There we go. So this is what we're doing. We're plotting everything out, right? We got to prepare ourselves. From 9 to 9:30. Can you guys see that? Is that good?
Yes.
Okay, so what are we doing? We put those lines in for 9:30. And we're going to put our horizontal lines for support and resistance levels. Okay, look left, and you see there's a level there. This one's kind of tight. You always got to look. Always got to look. Yeah, this one's pretty tight. Look left, that's a support, resistance, but then it went above the left resistance line and started consolidating right here. So this is would be your support and resistance levels right here. So we're going to take that line off. Okay. And the reason why it's consolidating like this is because London session has closed and then the New York session is about to open up. That's why. So it gathers everybody's orders right here. It traps people right here. And a lot of people that put a buy or sell order in here are trapped because they don't know whether it's going to go up or down. That's why I always say do not trade when it goes sideways because you get trapped. Okay.
Mhm.
All right. Now, okay. So what did I say? Rule number one was if one of the candles close above the line, that's the direction it's going to go in. Close below the line, that's the direction it's going to go in. So put that in your notes. At 9:29, what candle closes below or closes above? And that's when you're going to enter the trade at 9:30, based on what you see outside of this box. Does that make sense?
Mhm.
Okay, let's click play. Okay, let's pause. So what do we see? This candle, right, close above your resistance line. Does that make sense? You see that?
Yes.
That's 928.
It's 9:28. Okay. And what did it do? It came back and retouched. But at this is 9:30. You're in it because you know at 9:28 it closed above it, right? It didn't come back down. So you know 9:28, 9:29, you're gonna get in for a buy. So this is at 9:30. So you would have been in the trade at 9:30 and rode it all the way up to this point, and you get out before 9:31 happens. You would have made all these pips. You would have captured all these pips at 9:30, but you had to get out before 9:31. Does that make sense?
Wow. Yeah.
Okay. All right.
So resistance became supporting level, right?
Say it again.
Resistance level now became a supporting level.
Correct. Correct. But
That seems pretty intense.
yeah.
Being that, it usually takes about 20, 30 seconds to do anything. So
Yeah. Exactly. This is rapid fire because yeah, you want to get in and out quickly. Grab that bag and you're out. Okay.
yeah,
And then turn the computer off.
Right. But some of us will try to stay in the trade and say, okay, if it comes back down and touches now the support line, I want to try to get in because I know it's going up, right? But I don't want you to think beyond the 1 minute trade. You're in and out during this candle at 9:30. As soon as this candle closes, you're out. Don't wait for this candle. Don't wait for this candle. Don't wait for this candle. 9:30, you're in and out for 1 minute. And had you got in, you would have made some money in the on the upswing, and then you get out at the top. Okay. Okay, so we'll do one more. We're going to go to Friday. I think Friday was a really interesting day. So what's the very first thing I do? Anyone?
Set your lines.
Exactly. Okay, this is 9:30. Hold on one moment. I'll be right back. Okay. Hold on. All right, so resume. Pick up where we left off. Okay, so now we know where 9:30 is. Okay, so we're going to put our support resistance levels. Left, touch the lot over here. Left, touch the lot over here. Let's see. Put it there or below here at the body of the candles. So bring this down a little bit here. I look left to see, okay, how many times did the candles touch the line to find my support and resistance levels? All right. We need to put it a little bit higher. Okay, so let's click play and see what's going on here. Okay, so it's above the line. Okay, so you see that? You entered at 9:30. You close at 9:31. It shot up, right? You see that? So you already know it's above the line, so you're entering for a buy. Okay, at 9:30, you enter at a buy. It shot up, you close before this candle closes. You have to be quick. You have to be quick, right? Because it did retouch the line at 9:31, right? But you're out of it at 9:31. You're in and out in 1 minute. That's what we call the 1 minute strategy. Because look at that. You would have saw nothing but red if you didn't close out on this candle. Okay, so you guys got it now?
Yes.
That's a 1 minute strategy. Pretty cool, huh?
Yes. Yeah.
All right, y'all. Okay, so that's the 1 minute strategy. And that's pretty much what I teach you guys. I mean, there's one more indicator that you could put on your chart that'll help you out as well. It's called the top down, the top bottom indicator. I kind of like this indicator because it tells you the blue is when the market's up. The red is when the market's down. Okay. So this is a really, Yeah, if you go to indicators, you click on top, bottom, and you star it. It's by Ceyhun. Sehun. You got 1,237 people using his indicator. Top, bottom. Make that your favorite. I like using it with my other indicators because it also gives you buy signals. It'll type in a buy signal before it gets into the blue. It'll type in a sell signal before it gets into the red. So that can help you guys out as well. Okay.
Would you recommend that starting off for someone that's just starting?
Yeah, definitely. Because these are the only four indicators. Now you can't put 4 indicators on your chart if you're a free member with TradingView. You got to be a paid subscriber to have more than 1 indicator. I think they only allow you 2 as a free member. So you might want to consider subscribing at one point to become a paid member of TradingView in order to add more indicators on your chart, or you just use 1 at a time. Because remember I told you about my MAs, okay, moving averages,
Mhm.
okay. So let me show you something. The crossover happened right here, right? The gold crossed over the green for a sell. You see that?
Yeah.
And what word do you see right before? What's this do you see right here?
So.
It's telling you to sell. Right? So that's a hint, right? All right. Okay. But if you miss this sell, what did I tell you guys to do? Wait for the retrace, push back right here, and then you get in again over here somewhere.
Yeah.
All right. Okay, so definitely take a look, put these indicators on your chart, play around with them, test them out, use them, back test them. Always look left, make sure everything is copacetic.
Mhm.
Yeah, and then you guys will be experts before you know it. Okay, so I'm going to stop the recording. And yeah, this is what I teach. This is what I train on. And this is what you guys are going to learn and master and keep it simple, 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 simple. Does that make sense?
Yes.
Yeah.